What is mean by income tax? Income tax is a tax that is a government levy imposed on individual or business entities. The amount of tax owed is typically of the income of the person. Which levy include salaries, investments, and other sources. The tax is collected to fund various purposes and the government functions. Tax rates and their rules can be varied depending on the jurisdiction and the specifics of the income being tax is called as a income tax. Next one, history of income tax. The history may be the different levels to be followed. First one, ancient time. Second one, modern income tax. And the third one, global adoption. We will discuss one by one. First one, ancient time. The ancient time, the concept of income taxation dates back thousands of years with the early civilization like Mesopotamia and the ancient Egypt levying taxes on the agricultural yields and the trade. That is called as the ancient times of income tax. Second one, modern income tax. The modern income tax is a system emerged in the 19th century with a country like the United Kingdom and the United States implementing progressive income tax laws to fund government operation. That is called as a modern day of income tax. Okay, third one, global adoption. Today, the global world, the income tax is a fundamental part of the fiscal policy. Most of the countries around the world serving as a primary sources of government revenue. It is called as a global adoption of income tax. These are all the history of income tax. Next one, objectives of taxation. The objectives of taxation is the following important points. First one, revenue generation. Second one, wealth redistribution. Third one, economic stabilization. We will discuss one by one. First one, revenue generation. The revenue generation is the primary purpose of taxation is to raise the funds for government operations, public services, and the infrastructure development. It is called as a. It is one of the objectives of taxation. Second one, wealth redistribution. The wealth redistribution is the income tax can be used as a tool to redistribute the wealth and promote social and economic equity of the people. Third one, economic stabilization. The economic stabilization is also the tax policy can be leveraged to influence economic conditions such as increasing investments or discouraging certain behavior. This called as a economic stabilization. These are all the objectives of taxation. Next one, features of income tax. The important features are as follows. First one, progressivity. Second one, reduction of the credit. And third one, self-assessment. The progressivity is one of the features of income tax. The income tax system are often designed to be progressive, where the higher individuals pay a larger percentage of their earnings in the taxes is one of the features of income tax. Next one, deductions and credits. The deduction and the credit is one of the features of income tax that tax codes typically offer various deductions and the credit to reduce the overall tax burden of the individuals and the business is called as a deductions and the credit of the income tax. The third one, self-assessment. Self-assessment is one of the features of income tax. The taxpayers are generally responsible for accurately calculating and then reporting their taxable income into the annuity and the non-compliance. This is called as a self-assessment. These are all the features of income tax. Next one, meaning of income. The meaning of income comes under the different heads. That is earned income, investment income, business income, and the other income. So these are all the sources of income of each and every individual they have earned. First of all, we know the earned income. What is earned income? Earned income, the each and every individual they have earned the income from the way of wages, salary, tips, and other compensation received for personal service performed is called as a earned income. What is the investment income? The investment income is also the income earned from the individual or the company or achiever earned from the dividends, interest, capital gains, and the other return from the investment and the asset is called as a investment income. Third one, business income. The business income, the each and every assessee they have earned the income from the profit from self-employment, partnership, or other operations of a trade or business. It's called as a business income. What is meant by other income? The other income is also the income earned from the individual after his retirement. Retirement, that is the retirement benefits, government assistance, and other miscellaneous sources of income is called as a other income. These are all the sources of income of each and every individual. Next one, types of income. The, there are different types of income. That is taxable income, non-taxable income, deductible income. What is mean by taxable income? The taxable income that is subject to taxation, such as wages, investment earnings, and business profit. These are all the income earned from the taxable income. Second one, non-taxable income. The non-taxable income is the income that is not subject to taxation, such as the government benefit and the government benefit from the individual gifts and the tax exempted investment is called as a non-taxable income. Third one, deductible income. The deductible income, the each and every individual have to earn the income under the deductible income. The income that can be subtracted from the one's total income to reduce the overall tax burden of individuals, such as charitable contribution and qualified business expenses is called as a deductible income. These are all the points are different types of income. Next one, progressive tax system. The progressive tax system is a system that they have to following some important points. That is the marginal rates, graduated brackets, fairness principle. First one, marginal rates. The marginal rates is one of the income tax system often use a progressive structure where higher levels of income are taxed at a increasingly higher marginal rates is called as a marginal rates of progressive tax system of income. Second one, graduated brackets. The graduated brackets is one of the taxable income is divided into different brackets with each bracket subject to a specific tax rate that increases as income rises. That is called as a graduated brackets under the progressive tax system of income. Third one, fairness principle. The fairness principle is the progressive tax system is designed to promote fairness by ensuring that those with higher incomes contribute a larger share of their earnings to the government. Next one, deductions and credit. What is meant by deduction? Deduction is reduce the amount of income that is subject to taxation, such as the mortgage interest, charitable contribution, and the business expenses. These are all comes under the deduction. What is meant by credit? Credit is directly reduce the amount tax owed, such as earned income tax credit, child tax credit, and education tax credit. It is called as a credits. Optimization. What is meant by optimization? Optimization is one of the taxpayer often work to minimize their deduction and their credits to minimize their overall tax liability and they increase their refund or reduce the amount they own. That is called as a reductions and a credit. Filing and the complaints of income tax. First one, annual filing. Second one, deadlines, and the third one, audit. So each and every individual they have to earn the income during the previous year. They have to file the return of income tax. So that is called as a annual filing. The annual filing, the individual are generally required to file an income tax return annually, reporting their total income, deductions, and the tax liability. Second one, deadlines. The tax returns must be filed by a specified deadline, typically April 15th in the uh, Income Tax Act 1961 with the penalties for late or non-filing. The third one, audits. The tax authority may conduct the audits to verify the accuracy of taxpayer information and ensure the compliance with the tax law and the regulations. It is called as a audits. Next one, Introduction to Income Tax Act. The Income Tax Act is a comprehensive legislation that outlines the rules and regulations governing the taxation of income in a country. It defines the various types of incomes, deductions, and their exemptions, ensuring a fair and efficient tax system. One, definition of assessee. Assessee are different types of assessee. First one, individual, into undivided family, and a company. What is meant by individual assessee? The individual assessee is a person who is liable to pay income tax, including salaried employees, professional, and self-employed individual as a individual assessee. Second one, Hindu undivided family. The Hindu undivided family is a family unit consisting of all persons lineally descended from the common and their wives and their unmarried daughters is called as a Hindu undivided family. Company. Company is a artificial and a judicial person. Any Indian or foreign company, including public and private limited company as well as corporation, is called as a company. Thank you for patiently listening.